Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. Today, I want to give you my top 5 stocks inside the Dow Jones 30. I say it's really called the Dow Jones. I say the Dow 30 because it's 30 companies in there. So I wanted to explain what the Dow Jones is, why it is kind of important, which stocks I like in it, why I'm even looking here to begin with, and obviously how well those stocks are doing and what I expect for the rest of the year. All right, so number one, Dow Jones, the oldest index out there. It's been around since like the 1800s. And when a lot of people say the stock market, this is what they mean. Now, we all know, us here, we know that the S&P 500 is a better, more complete measure. It's 500 companies. Like these are just the top 30. This is the most popular. So the names of the first companies that you think of, they're likely inside the Dow Jones. So like, Microsoft, Apple, those things, Disney, they're all inside the Dow Jones, but it's only 30 companies. So the S&P 500 gives us a much broader measure. And when we say the real stock market, the S&P 500 is a better measure. The Dow Jones is just the 30 largest. So I want to get into it, give you my top 5, and kind of tell you why I'm looking to the Dow Jones as opposed to an index like the NASDAQ. The NASDAQ is all tech focused, and tech ain't doing all that hot. So we want to diversify. It's almost been a quarter. We got 2 days left to move into Q2. It's a good time to sit down, reevaluate your investments, and put yourself in the best position to move forward. So as we're talking about this, I'm going to pull up my chart just so I can see everything here. But what we know from this year is, we got another stimulus. We got an infrastructure bill that I think was like $3 trillion, which is good for some companies. But tech just hasn't been what we have known it to be over the last several years. I think, for example, Apple, which, Apple was a name that everybody could bank on. Type it in here. Apple is, at least when I checked it earlier, they're negative on the year. So they're like down less than 1%. Now, it's not the worst thing in the world, but down is down, right? It's not what you would think. And some companies that you may not think of or may not be top of mind are doing very well. So I want to go ahead and discuss those. So I'm looking at Yahoo Finance right now. I have it on year to date. So that's January to right about now. All right, so let's go ahead and get into it. So the first two are banks, and I am pretty big on the banks right now. Now, I think you could make more money with regional banks. So I think it was First National Bank, BANC, BANCF, I think was the ticker symbol. If I didn't get it right, go back and watch the other video. I went over 5 bank stocks that I do like. But one of them that's in the Dow Jones is JP Morgan. JP Morgan is up about 20% year to date. Again, that ain't too bad, but we know that the banking industry is in position to do well because as things open up, as more people get vaccines, and as more businesses open up, they're going to need capital. They're going to need loans. There are credit losses. So people who took out debt, mortgages, all that kind of stuff, and weren't able to pay due to COVID or due to job loss, they're going to be able to make those payments now, and that's going to cut their losses, which makes them look a whole lot more profitable. Or actually not look, they actually will be a lot more profitable. So over this year, 2021, they're up 20%. But check this, Goldman Sachs is up 26%, which is a touch better, but this gives me a comparison point. So I might want to take some time and look into both of these and see which one I like best. But again, you got Goldman Sachs and you've got JP Morgan. The symbol for Goldman Sachs is just GS. They're slightly different. JP Morgan can be viewed on a consumer perspective as much more because they own Chase Bank. They're a little more consumer focused. Goldman Sachs, you're not going to walk into a Goldman Sachs branch unless you got like $2 million. They did just launch Marcus, which is an online consumer bank. So they do have that, but it's relatively young. They also, I don't know if they launched it yet, they also are launching an investment platform too for regular investors like us. At some point, I may get around to reviewing it. We'll see. But those are 2 places that I'm looking. I will likely choose one or the other. Right now, I have my eye on JP Morgan. I want to take some time and review Goldman Sachs and see if that's the direction that I want to go instead, or maybe I'll own both. We'll see. So we got JP Morgan and Goldman Sachs. So those are 2 of the 5. The next one, Boeing. Boeing is up 14% as of year to date compared to the stock market is up like 5.82%. Now, earlier, and we're talking like back when they had those crashes, which I think was 2019 or so. The years are running together. I wasn't really big on Boeing because of what was going on then. Then we had the virus, and just things weren't looking great. Now we're kind of out of that phase. They've got some stuff approved. I think it was Southwest that put in a bid to get 100 of their smallest 737 Maxes. I think that's, I could get the numbers wrong in terms of the type of plane, but they did put in a huge order. So that's big for Boeing, and they're kind of trending in the right direction now. We're kind of, I'm not gonna say we're in the clear with the virus, but there is into the tunnel. They did kind of get over the lawsuit to a degree. They are manufacturing more. Again, you got Southwest Airlines buying more planes. That's always a good sign. So they're looking like they're trending in the right direction. Doesn't mean they're going to stay on the up and up. However, this might be a time to consider looking at them as well. They're about, let me see what they are. They're about 244 a share. Not that it really matters because you can buy fractional shares anyway, but I just wanted to point that out of where they are right now. Next, so we got JP Morgan, Goldman Sachs, Boeing. I'm really going to take a hard look at Boeing. Maybe we'll do a separate video. If you guys want one on Boeing by itself, feel free to type that in the comments because one I'm actually interested in. Or more interested in. The rest of them, I'm interested in all of these, but Boeing really catches my eye. I think it has a lot of potential. Now, next is a tech name that, yes, we know tech is not doing that well, but it don't mean all tech companies. Intel. Intel's up 30% this year. I'm actually in a short-term trade for Intel. I'm trying to get in and out within the next like 3 or 4 weeks. Intel, they're getting back into the semiconductor space. I don't know where they were the last few years, but their new CEO is moving back to the semiconductor space, which is good because there's supply and demand. We are low on semiconductor chips, which means that Ford actually had to cut some of their production and lower their revenue numbers because they don't have the chips to make all the cars they're trying to make. The PlayStation 5 can't get one. Part of it is because we ain't got enough chips. So other places or other companies in this space, NVIDIA, which has done incredibly well, you can throw Micron in there, AMD, like these are other chip makers. And Intel used to be one of the biggest players. And for whatever reason, last several years, they just kind of fell off. And now this new CEO is trying to move them in the right direction. They're supposed to build a plant in 2024. That's way too far out for me to care right now because my trade is short term. But also, Intel was one of the first like 5 or so stocks that my son owned. It did well for a little bit, then it fell off, and now they have a new CEO. So now we know why they fell off. But look, it's a new year. We see what we see, and you got to put yourself in the best position. Right now, they're up 30%. They were up 23% or so over the past year. It's something to look at, something to at least, not something I would bat an eye at like I did in like 2018, 2019. So this is something to consider. Then we got the last one. Number 5 is Caterpillar. Caterpillar is surprising. They do pay a decent dividend, if I recall correctly. They're up what looks like 24%, which again is good. So you got 30, 26, 24, 20, and then 14 for all 5. So the worst stock here has made 14% since 2021, which I mean, that's hard to beat because the stock market ain't even above 6 right now. So Caterpillar is doing really well, actually, clearly. But there's an infrastructure bill, a part of the huge spending plan that was passed recently to build more stuff, right? Also, as things start to open, construct places that were under construction may continue to be under construction. But also, here's the biggest thing that stood out to me. Kathy Wood, she is the genius who is behind all the ARK investments. So that they have a ton of different funds, but the ARK Innovation ETF, the one that did incredible last year, she's got a bunch of different versions of that. And one of them is like a construction building fund, whatever it's called. She's really big into Caterpillar, and anything that she has an eye on, we should all have an eye on. But she's really big into Caterpillar. Again, it's up more than 20% this year. I'm gonna go and pull up the 1 year. So over the past 1 year, some of the highest performers here, you got Caterpillar up more than 100%. Looks like 117% over the past year, bruh. And then you got Goldman Sachs right behind it at 106%. So again, it's something to consider. Now, obviously, the numbers are a bit different because we're already a year ago in 2020, we had kind of just finished that terrible dip that we all went through that most people just happen to forget. So all the numbers are going to look a little bit more, are going to look a little better than what they normally would. But again, a year ago, they were up 116%, or a year from now, they're up 117%. Goldman Sachs up 106. That's something you got to look at. So those are my five: JP Morgan, Boeing, Intel, Goldman Sachs, and Caterpillar. All of these I want to do more research on and kind of pull the trigger. I really got my eye on JP Morgan already. I own a tiny bit of Intel for just a short term. I think, again, in the next few weeks, it'll hit my price target number and I'll just hop out of it. And maybe we'll see what happens if I want to get into something long term. But Goldman Sachs and Caterpillar, I never would have thought that Caterpillar would have been that good. It really has my attention, and I'll probably be talking a lot more about it on public in the next few days. So, of the five, is there a versus that you want me to do, if you will? Is there one that stood out or one that surprised you? Let me know in the comments. I really want to hear your thoughts. And that's it for me. I'll talk to you guys later.